Welcome to USAWatchdog.com. I'm Greg Hunter. Back today, Eric Sprott of Sprott Asset Management. His company has about $10 billion under management. Eric Sprott, thank you for joining us today.
Happy to be here again, and congratulations on all the great interviews you have.
Well, thank you very much. It's very kind of you. You're one of the great ones, incidentally. I just want to talk to you about, I want to start with the negative and end up on the positive, because I think I know how this is going to go based on your comments. One viewer wrote me, one visitor, and said, hey, listen, they're selling this mine production at around $30 an ounce, and how is it ever going to go up if they're selling the mine production for this amount of price? And I know you got an answer for that because you've been buying and adding to your fund. You've been buying silver. So how can they sell this for $30 an ounce and it not go up, or and it go up?
Yeah. Well, are you referring to the mining companies or the
the mining companies? Yes.
Well, there are mining companies that produce it for less than that. I can think of many that produce it for less than $10, and there's lots that produce it for over 20, and some that don't make any money. Those that don't make any money obviously won't survive in this environment. But silver production is not likely to go up much this year. As you know, gold production was down last year. I suspect gold production might be down again this year. It's hard to get a feel on silver because a lot of the big producers are not really public companies, so I don't have as much grasp on that as we'd like to get. And it, of course, doesn't come from the Americas particularly. So, but my biggest concern, Greg, with silver is what goes on in the paper markets, right? And as I've said before, the key thing to me is I see what people are doing with their money. When I look at the U.S. Mint website and I see that people buy 50 times more physical silver than gold, 50 times. And you and I know, or people who are students of the mining business know, we only produce 11 times more silver than gold. And most of the silver that's produced is used for manufacturing purposes, industrial purposes, whereas most of the gold is used for saving. I've made a calculation. I only think there's 3 ounces of silver available for investment compared to every ounce of gold. But if you go to the U.S. Mint website and you see they sold 7 million ounces of silver in January, and I think they sold 150,000 ounces of gold, you get, a ratio of 50 to 1. And that's with them only selling for half a month. So between that data point and the data point of when we do a trust issue, a silver trust or gold trust issue, we raise about the same amount of money, which means we buy 50 times more silver. Well, how long can people keep buying silver at 50 to 1 when it's available at 3 to 1? So that's what makes me think silver will outperform gold here.
And what do you say to your naysayers who are like, oh, well, silver has been trading in a very narrow range? Based on your metrics, that range is about to change. Is that right? Is that what you're thinking?
Well, you got to appreciate that the people who talk about where silver is trading are talking about the paper markets. And when you start comparing a paper market to a physical market, that's when we all get into trouble here. Because in the very short term, anybody with deep financial pockets can affect the price of silver. And that's why we see, as option expiries coming up, the price gets knocked down because they don't want people to exercise options. If there's a particular trend line they want broken, maybe they can smash it so they can cover the shorts. As you know, Ted Butler's written at length about the oversized position in silver shorts. And these are things that we can't change until we definitively see a physical shortage. And someday we may see that, where Apple says we can't produce this because we can't get the silver, or Samsung says we can't produce the S3. We haven't seen that yet. But I would certainly suggest, based on what I see coming into the silver market, the amount of demand that there is, that we can't be far from that. It's much easier to make that case, by the way, of a shortage in the gold market, in my mind, just looking at the annual supply and demand data, not the data that's published, the data that's available to us in the public domain.
Well, let's talk about, I want to get to gold in just a minute because you had some very important comments about scrap and that market drying up. But before we get there, you were talking about, you kind of changed your tone. There's been a change in your tone, I am reading, in some of the recent comments you made just last week. And that is, you're saying that, hey, silver could be 100, 200 an ounce if we have an implosion in the economy. I mean, what are your handicap and implosion in the economy? I mean, we're printing $85 billion a month. We have 0% interest rates. Everybody thinks this is the way to go. This is a normal, standard operating procedure now. Or just print money, we'll be okay.
Yeah.
Tell me about what you see precious metals doing if there is an implosion, and how far away do you think we are from some serious disruptions in the financial markets?
Well, it's a great question. And anybody, and you're a student of the financial markets as I am, and pretty well every week there's something chaotic going on in the financial system. I can go back to 3 weeks ago when Boswell Montepasschi had his problem. The Bank of England had to bail him out. I can go back 2 weeks ago when SNS, the third largest bank in the Netherlands, had to be bailed out over a weekend. I could even mention this week when Peugeot loses 4.9 billion, and the ECB lends them 1.2 billion so they don't start these dominoes falling. And even if I was to look at the whole economic infrastructure that's going on, we had so many negative GDP prints here. Why people would imagine we're going to have any economic growth is simply beyond me. I don't get it. I've always believed that weakness begets weakness, subject to two outside influences that can change it. One is monetary policy, one's fiscal policy. There's no room in monetary policy. We already have zero interest rate and printing. I mean, yes, we can print more, but the more you print, the more the people who aren't printing are going to take notice and do something about it. In terms of fiscal policy, there's no room in fiscal policy here. I mean, in the U.S., we're talking about sequester, we're talking about tax increases. There's no room for fiscal policy. Weakness will beget weakness as companies lay off people, others get affected. It's not just the first time layoff, it's the other people that get impacted. So I think we're in a very weak economic environment here in North America. We're obviously in a recession in Europe. And what's going to bring them out of it? I mean, didn't we just read that Spanish unemployment went to 27% now? It just gets worse and worse and worse and worse. So, how long can they hold the system together? I have this vision of, the central planners are probably talking on the phone 24/7 here. We got this problem, we have that problem. How do we put it up? Well, you print money, and I'll print some money, and I'll say your currency manipulation is not bad, and then I'll go and manipulate my currency down, and there's this huge chaos going on in the financial business, which I think we all sense. And to me, it's just, there's no solution. We are using desperate measures here now to try to hold it together. The financial system, not the economy.
Well, let's talk about if the things get out of control. I mean, the last time we talked, I said if the prices weren't suppressed, and I think is a pretty good case for suppression of gold and silver prices. The last time you told me is the prices weren't suppressed, and this is several months ago, you'd say silver would be $150 and, gold would be $2,500. What do you say now?
Well, I would say exactly the same thing, except probably higher, because there's developments that happen all the time, right? We're printing more money now. Japan's printing more money. The U.S. is printing more money. The economies are weaker than when I would have spoken to you 3 months ago. Most people didn't even realize we were in a recession 3 months ago. I remember when we started 2012, and it was going to be a great year, right? Going to have 3.5% GDP growth. Well, here we are 12 months later. We got negative growth. And look how much money we spent to get negative growth. I mean, it's a formula that doesn't work, right? You take on $1.5 trillion of debt, and you get no growth. You end up with negative growth.
That's right, tenth of 1%.
And Greg, one of the things that I think is truly important here, you know that the U.S. Department of the Treasury issues a generally accepted accounting principle deficit calculation. And I know you've interviewed John Williams before, and the number is $6.9 trillion was the number for the September 2012 year. $6.9 trillion deficit in a $16 trillion GDP economy. And it'll probably be $8 trillion this year, some other number that's bigger than 6.9. Now, you and I both know that someday the rubber has to meet the road here, and you got to tell these people who think they have entitlements, they're not going to get them. And in the two examples where countries have had to do that, Greece and Spain, where they said, oh yeah, we got to cut your pension plan, we got to cut this. Next thing you know, unemployment goes to 25% and retail sales fall by double digits. So that's what's going to happen someday. I don't know when it's going to be, how long they can keep making us all feel that everything's okay, but we know it's not okay.
Well, what's not okay, you see all these, in my town, in every town in America, you see these guys holding signs, buy gold, we buy gold, cash for gold. And that market is drying up. I mean, that has supplied the gold market with a lot of, people, desperate people getting rid of their gold, which is a dumb thing. They pay them diddly nothing for it. They don't pay them anywhere near spot price. Maybe if they paid them half the spot price, they'd be lucky. But anyway, you're saying that market is drying up. Tell me about that.
It's changing. The number of gold, the amount of gold being recycled is going down. I've always debated the GFMS data on gold. That's the site that the World Gold Council uses to produce their data. And I've always thought to myself, do I really believe that in let's say the World Gold Council says a 4,500 ton market, that there's 1,700 tons of recycled gold and 2,700 tons of mined gold? And so I will ask you, well, how much recycling do you have? Even the U.S. data suggests that the recycling in the U.S. is about 20% of the gold mining. And I saw Russian data where it's 10% of the gold mine. So where is all this recycling taking place? And I furthermore can tell you that I've seen Johnson Matthey, who's is a mint that recycles things. I forget what the number was, but it was down quite substantially. They're reprocessing a metal. And I've heard anecdotally from other people that reprocess metal that it's way down. I've seen some data that suggests it's down 50% in the last 2 years. And why is that? I suspect, particularly if you're talking North America or even Europe now, those who are desperate have been desperate for a long time. The wedding ring disappeared many years ago. Imagine the 25% people unemployed in Spain. I mean, I don't think they're waiting till February 2013 to cash in their excess gold. That's long gone. So there's no doubt in my mind that recycling of gold has decreased, but I don't like the fact that people rely on GFMS data. I mean, I think there's a huge shortage of gold that they never come up with it. I mean, to suggest that, China's consumption of gold went up 4% this year. I mean, it just seems so asinine to me. When you see the gold imports where they are, they went up by something like 50% last year. And the GFMS comes along and says consumption was up 4%. Well, I don't get it.
When do we have a default at COMEX? That's going to be the day that COMEX says, yeah, we're going to have to pay in cash. Or LBMA, yeah, we're going to have to pay you in cash. Yeah. When is that day coming? I mean, you're clearly predicting that day is on its way.
Right. And I go back to that because, the central banks own something like 36,000 tons of gold. There was a great article written suggesting even in 2000 it might have only been 18,000 tons of gold. And my work tells me that we're consuming an extra 2,300 tons a year. Well, that's starting from 2000, so there can't be much left there. And even as I point out to you, here the U.S. exports 250 tons of gold last year. Well, beyond their production, where's the gold come from? How do you export 250 tons that you didn't manufacture, you didn't mine? There's only so many people that have gold in the U.S. that can export it. And that's a huge amount of money, by the way. So I have no doubt that they're running on fumes. I think almost the worse the financial system gets, the more they want to keep the price of gold down because it's the canary in the coal mine. It's the tell on moving into a hyperinflationary environment and that people realize that the central bank policies are ridiculous and irresponsible. And people would recognize that through the price of gold and silver going up. And that's why there's a reason to keep it spread. Paul Volcker, in describing the 1980 problems, had said one of the major mistakes we made is we didn't get control of the gold price. The gold went from $35 to $850, and you ended up with 18% inflation because it was a tell there. People realized by looking at the gold price that we had a problem. Well, we're not getting to see the tell this time around. Almost since the European problem hit its peak back in May of 11, that's when the gold price peaked. And of course, it's a disaster in Europe. We had bank runs. We had money printing. It's almost, it's out of this world. But the price of gold is down, even notwithstanding all this fiscal body of gold that we see. Every month we see the data, you see more body.
Well, they can control it as long as they have some gold to hand out to the window when the contract comes due, right. Or silver.
Yeah.
But and when do you think that day's happening when they say, we're going to have to pay you in cash? Sorry.
Greg, I don't know when that day is. I truly don't know when it is. I kind of hope that someday they'll look in the cupboard and say, you know what, we're going to lose this well, what are we doing here? You know, we got so little left. What's the point? When are we going to give up? But I would hate to think what happens when we all find out there's no gold in the Treasury. What would interest rates do if we all found out there was no gold in the Treasury? There's nothing backing the currency except the promises of the politicians or the promises of the central bank. I think it would be quite distressing for the financial markets. So maybe let's just go all in until it's all gone. But I don't know when that happens because we don't get any data, as you know. Unfortunately, central bank financial statements are totally non-transparent. And they can hide the fact that they've leased their gold.
You have been buying silver. I suspect you've been buying gold too. Where do you think the price is going to go in the next couple of years? This long, narrow channel of gold and silver is going to end. When do you think the channel ends? When do you think we see a move upward? Is it 2013, the year where, as you say, that rubber hits the road? I mean, with the sequestration and the new debt ceiling fight, the fight between Democrats and Republicans, are we going to see a major dislocation and a pop in gold and silver?
Well, Greg, all I can tell you, I expend all my efforts explaining the physical demand for gold and how it's so out of line with the supply. And we see new data every month. You know, whether it's the U.S. export data, whether it's the Chinese importation of gold, whether it's the central bank buying that keeps it going higher. And, you know, how can new people come into this market when there's been no increase in supply on an annual basis for the last 12 years? All these new buyers, but no increase in mine production. In fact, mine production was down last year in 2012. So I can't predict when it's going to happen. All I know is the price. If I look at the choices an investor has of owning stocks in countries where the government's obviously broke, or owning bonds where the government's obviously broke, or owning gold or silver, I know in the long run or short run, medium term for sure, they're going to be better off. And you know that everyone's fighting to hold the thing together. Are they going to be able to hold it together? I don't know. There's new measures every day.
But at some point, it blows.
At some point it blows. There's no doubt about it. I mean, it's just like connecting the dots.
Eric Sprott, Sprott Asset Management. Thank you for joining us today on USAWatchdog.com.
Greg, my pleasure. All the best.